I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, markets get a breather. Apple, Tesla, and Cisco leading the gains after the S&P tech sector lost $220 billion in value a day earlier. What does the rest of the week hold as the trade war with China escalates? Plus, a Mickey miss. Disney shares fall as much as 5% in after-hours trading on third-quarter revenue estimates to blame theme park attendance, new streaming service costs, and that Fox-inherited movie flop, Dark Phoenix. And Google gets an earful. The search engine's rivals blast the company for requiring them to sign non-disclosure agreements to join the Android auction, claims they're strong-arming the competition. But first, to our top story. What a difference a day makes. Major markets have closed in the green after Monday's record-breaking losses. That follows increased trade tensions between the U.S. and China, and tech can be partly thanked for Tuesday's turnaround with the likes of Apple, Tesla, Cisco leading the gains. The S&P IT index also closed up 1.3%, while the Nasdaq closed up 1.4%, snapping 6 straight days of declines. But should tech investors be popping the champagne just yet? Joining us to discuss Bloomberg's MLive senior markets editor Mike Regan. Mike, should they?
I don't know if I'd necessarily pop the champagne just yet, Emily, but they certainly can at least breathe a little bit of a sigh of relief. As you mentioned, tech was the leader on the downside yesterday, mainly because people saw that fix in the Chinese currency Sunday night, Monday morning, China time. And it was a dramatic move. It was the weakest fix for the currency on a percentage basis since 2015, and it allowed the currency to drift above that 7 level versus the U.S. dollar. And that people had basically thought that was a line in the sand, and China would not let it weaken past that. So last night's fix, the People's Bank of China actually fixed the currency below 7, so that's psychological important. It was clear they weren't letting the currency just drop into free fall. And obviously that's important for tech investors because so many of these companies get so much of their revenue from China. If you look at stocks that big companies that get more than 15% of their revenue from China, it's a whole lot of the sort of brand name tech companies. Many of the semiconductor stocks, Apple, Tesla, a lot of the really important tech stocks derive a significant portion of revenue from China. So to see that currency stabilize a little bit allowed them to rebound today. I mean, tech is still down quite a bit from its highs in July. Semiconductors especially, they dropped more than about 12% from their highs in July, at the end of July. So to see a rebound of about 1.5% today is not necessarily really sending the all clear signal just yet.
So how much of this simply has to do with the level at which China fixed its currency?
Very much. Today, in particular, has a tremendous amount to do with it. There was that concern, like I said, that not only that the fix was so weak Sunday night, Monday morning in China, but that this was the start of things to come, that they were really going to let the market push the value of the Chinese currency lower. But they clearly, China took some steps. They sold some bonds, Chinese yuan-denominated bonds in the offshore market that really kind of sucked up the liquidity of the overseas currency, yuan, the offshore yuan. And that it really made people start to believe that they're not going to let the currency go into a free fall.
What are the safe havens in this moment in time?
Well, it's a great question. I mean, outside of the stock market, we've seen a tremendous amount of money poured into the bond market. Bond yields really falling to the lowest since 2016. Gold trading near a 5-year high. Within the safe haven, within the stock market itself, there's a lot of debate about where the safe havens are. Utilities have gotten a lot of money, but they've really become what many consider a crowded trade, trading at very high valuations for the utility sector. Real estate, the same thing. So that's a good question. People are really trying to figure out where a good safe haven is in the stock market.
All right, Mike Regan, Bloomberg, thank you so much for that context. Now, when Xi Jinping first met Donald Trump back in 2017, the Chinese leader said they had 1,000 reasons to make the China-U.S. relationship a success and not a single reason to break it, quote unquote. 2 years later, ties are at their lowest, weakest point in decades, and they appear to be worsening by the day. President Trump's threat to raise tariffs on all Chinese goods last week shattered a truce reached with Xi just weeks earlier. And on Monday, the U.S. labeled China a currency manipulator, sending global markets into a tailspin, further escalating the trade war. To discuss the rising trade tensions and how tech is being impacted, we're joined by Proof of Capital partner Edith Young. So, Edith, you actually split your time between the United States and China. Give us a view of what's happening on the ground in China right now as a result of all of this.
I think it's interesting. President Trump called China the currency manipulator. I think from the China on the ground, a lot of them call them the tariff manipulator, and of course, playing a lot of politics and related tariff, and really fight against technology sectors, particularly in China. But what's been going on in particular with the Huawei ban for the last few months, create a really strange sense of national pride and support. A lot of the Chinese public felt bad for Huawei in many ways. So as you see, like the last quarter, it actually, so the mobile phone sales actually increased about 4.6%. We expect it actually impact their business quite a bit, but it's actually the other way around.
So Chinese consumers, you're saying, are sympathizing with Huawei, buying Huawei phones perhaps more often than they would have. Does that mean they're not buying, let's say, iPhones?
I love the iPhone, and I think Apple still do really well in mainland China. But having said that, just overall, I think just there is a sense of wanting to support the local brand and really feel bad and feel that they are a victim of this tension.
So how does this impact, and will this impact, the U.S.-China tech VC startup ecosystem? Obviously, there is a lot of cross-border investment, and there has, up to this point, increasingly been a lot of cross-border investment.
I think start with for Silicon Valley tech ecosystem in 2015, 2016. There's certainly a lot of Chinese VCs set up shop in Silicon Valley, wanting to bring U.S. startups to China. Having said that, even though we don't necessarily count on Washington for anything, but certainly CVS, the U.S. Committee for U.S. definitely send out a ripple effect, and particular name very specific funds from China, of very specific companies, to block a lot of these deals. Like think about Alibaba with MoneyGram, or recently Grindr, which a lot of these deals, simply is being called a national security risk. So it sends a very strong signal that maybe the Chinese VC is not quite welcome in Silicon Valley.
What do you think of the latest escalation? The president calling China a currency manipulator, which he has threatened to do for a long time, but actually didn't do until this week.
Well, I think that certainly President Trump's never stopped to surprise everyone. And the way that I usually describe is, many years ago, President Trump had this book called Art of the Deal. So to the Chinese people, a lot of times he's playing a lot of the negotiation tactic, just like he said on the book. But for the Chinese, particularly for Chinese government, is playing a long game. It's almost like the art of the war. So in many ways, I don't think it will be easy for the Chinese government to compromise in any way, and they will continue to fight.
So how is it impacting where you're putting your money?
It's interesting. I think for us, we certainly invest both China and U.S. And when I'm talking to my fellow VC in China that focus in China's investment, if you think about it, like the strongest IPO from China in the last 2 years, 48 months, many of them actually do go IPO on NASDAQ, on New York Stock Exchange, and they're e-commerce focused, logistic focused, or automotive. Their target market is actually not the U.S. at all. So very, very China focused. So now instead of coming to the U.S., some of the Chinese VCs thinking about maybe Southeast Asia, maybe Latin America, like Brazil, Germany, instead of coming to Silicon Valley.
So would you say we're in the middle of a tech Cold War with China? And if so, how does it end?
It's very unfortunate what's going on now. It pains me being somebody who spent time in both sides. And I think it will continue to have, especially in the investment venture capital community, I think that both community wouldn't mix as much. And I think both sides is not saying that any Silicon VC startup really need China money anyway, and neither Chinese startup really need U.S. money. But of course, we'd like to see more collaboration. So I think this so-called Cold War will continue to sort of really segregate both communities.
So what does it mean for innovation? Does that mean both countries are less innovative? Does it force both countries to innovate more?
I think, first off, I hate to sort of really compare. At the end of the day, technology is not a zero-sum game, and we will continue to see Silicon Valley focus on solving a lot of Silicon Valley problem, which even though China seems like it's doing well, and you see like over 200 some unicorns, but it's not anyone in the U.S. would want to play games made by Tencent or shop on Alibaba Tmall, and vice versa. I mean, Google and Facebook have been banned for a long time in China anyway. So in that sense, it will continue to stay as is.
All right, Edith Young, partner at Proof of Capital. Thank you so much. Really interesting to hear your insights here on the show.
Thank you, Emily.
Okay, coming up, we'll speak exclusively to Ardeen Williams, the Amazon executive in charge of HQ2 development plans and hiring. Next, this is Bloomberg. Welcome back to Bloomberg Technology, talking about Amazon now with a new program out to retrain workers, train workers from childhood to career. Amazon dedicating over $700 million to provide people across its corporate offices, tech hubs, and fulfillment centers with access to training programs that'll help them move into more highly skilled jobs within or outside of Amazon. One particular program that's attracting students is called Amazon Future Engineer. It is a comprehensive childhood to career program to educate and train kids and young adults from underserved and low-income communities to pursue careers in computer science. Earlier, we spoke exclusively to Ardeen Williams, Amazon Vice President of Workforce Development, about the program.
Amazon Future Engineer is a comprehensive program and really is an opportunity to meet kids of all ages where they are and help them build the skills that they need in order to continue in computer science and then hopefully to engage in a career that integrates technology into whatever field they choose to pursue.
So you're offering a scholarship and the winners actually get an internship at Amazon, which is a pretty huge opportunity. How many of those people do you think will become full-time employees, or what do you hope?
Well, we hope that all 100 of them become full-time employees, but what's most important to us is increasing the pipeline of students that pursue computer science, because that benefits not just Amazon, but the entire tech community at large.
So how are you benchmarking yourself? What will be a measure of success?
So we look at a number of things. There's the regular feedback on the program that we solicit from both participants and teachers, and then at the high school level, we look at how many students actually take and pass the advanced placement tests, and then for those who receive scholarships, we look at the scholarship renewal rate, which tells us that they're continuing in computer science, and then for the interns, whether they choose to return to Amazon or not at the end of that first year, we look at whether they get an invitation back, because that also tells us that they're strong candidates and making good progress in the field.
Now, you've been instrumental in starting to staff up HQ2 and focusing on the D.C., Northern Virginia area. When Amazon set up shop in Seattle originally, it didn't do programs like this, and we sort of saw the relationship between Amazon and the Seattle community suffer. What are you doing to engage more productively with the community in Arlington to build a better relationship from the start?
That's a great question. I think the nice piece about Arlington is we have a view to the flight path. We know that we're going to hire 25,000 employees over the next 10 years. And what that tells us is that we know that there are kids in school today that we'd love to get interested in computer science so that they can, in fact, progress and join the ranks of those college students that attain tech degrees. And we're excited to be here in Arlington and engaging with the community to learn more about the great programs that exist here now and where we can put our shoulder to the wheel and help improve things for the community at large.
So you've promised to add 25,000 employees there in a decade. What's the pace of hiring so far? Are you finding the skills that you need?
The first year is relatively modest. We'll hire 400 folks this year, and that's really so that the construction can begin on the site. And so far, we've had a fantastic response from the community and have had the opportunity to interview great talent. Talent is the #1 reason that brought us to National Landing, and we're excited to be here in the community.
Now, in doing all this hiring, you have an opportunity to change the profile of the company. About 3/4 of Amazon's managers are men. You don't report the percentage of women who hold technical jobs, but the rest of the tech industry is at about 20%, so not even close to 50-50. How will this program change that?
So you're absolutely right. This is a great opportunity for us to change the profile of folks who work in tech. And key to that is really impacting the pipeline. We know that within STEM, so science, technology, engineering, and math, fewer than 8% of that population actually pursue degrees in computer science. And a fraction of that 8% are women and people of color. And so by creating programs like Amazon Future Engineer, which expose students early in their education to computer science and make it something that they can see and understand and something that's inviting, provides the opportunity to make that pipeline richer, to invite more women and people of color into it, which ultimately helps representation in the workforce.
Given that you are staffing up HQ2 in Arlington, you're also working on building out a new site in Nashville. You pulled out of New York City after pushback from local leaders there. Some of the folks that were bound for New York City, what happens to them, and how's that plan panning out?
So we already, we have a large presence in Manhattan already, about 5,000 corporate employees. And so there is still a presence there. We have a fulfillment center in Staten Island, as well as other sites across the state. And so those businesses that were already in New York will continue to grow organically there.
All right, and I know you're focused on hiring, but we have to ask, you know, on a day like today when the trade war is escalating and the markets are roiling, how much are Amazon executives following what's happening between the United States and China, and how concerned are you about the impact that it could have on Amazon?
I suspect that our executives are following it closely, as they do any initiatives or issues that would impact our customers. And will, as always, take the long view and make decisions based on what is best for our customers.
Well, the stories keep coming. Bloomberg broke a story about the president considering intervening in the Pentagon's plans to award a huge $10 billion cloud contract, which many believe Amazon is best positioned for. You've got a new defense secretary saying he's going to look into the process by which that contract was awarded. How confident are you that Amazon will secure that deal? And if Amazon doesn't, if it goes to Microsoft, what does Amazon do?
You know, I don't have insight into the JEDI contract. I think that the secretary has, as a new secretary, has every right to take a look at the full portfolio of things that he manages and make the best decision for taxpayers.
That was Amazon Vice President Ardeen Williams. Coming up, Disney shares fall in after-hours trading after the company reports third quarter earnings that miss analyst estimates. Seems not even the Avengers could save the day. But Disney's streaming services have a price plan. We will have details next. Disney shares plummeting in late trading after reporting quarterly results that fell short of analyst estimates. Earnings squeezed by falling theme park attendance, spending on new streaming services, and a costly flop of a movie inherited in the $71 billion acquisition of Fox assets. Joining us to discuss, Bloomberg's Chris Palmieri, who covers Disney for us. So, Chris, I don't understand. Disney opened the most anticipated theme park attraction perhaps ever in Star Wars, and attendance dropped?
Yeah, we're calling it the Star Wars stumble. I mean, we've written about this. There was social media posts saying, "Oh, look, oh my God, there's nobody on Main Street. There's no wait for these rides," and there were a lot of explanations given. Bob Iger today on the call gave us, surprising mea culpa. He said, we tried too hard to kind of limit attendance because we thought crowds were going to be so big. They had a reservation system for the attraction. They'd never done that before. Everybody in Anaheim raised hotel prices, including them, he said. And they didn't have that other big attraction that they were going to open at Star Wars Land. And so people just stayed away. And the same thing at Walt Disney World. He in Florida, he said people were staying away because they're waiting for that Galaxy's Edge to open later this month.
So let's talk about streaming. Obviously, streaming weighed down on some of the expenses this quarter, but Disney firing a shot at Netflix, announcing a price for not just one, but 3 streaming services in one. Take a listen to this from the call.
That in the United States, consumers will be able to subscribe to a bundle of Disney Plus, ESPN Plus, and ad-supported Hulu for $12.99 a month. The bundle will be available on our November 12th launch date.
Disney CEO Bob Iger there. So, of course, Disney Plus, their new service, ESPN, and Hulu for $13?
Yeah, which coincidentally is the price of the entry-level Netflix package. So it's a direct shot at them. You're getting sports, you're getting kids' entertainment, and you're getting all the Hulu broadcast shows. And that's about a 30% discount if you bought those 3 services together right from the get-go. So, yeah, this is a huge push by Disney to go right after Netflix.
Let's talk about the film lineup. This Fox film that was a flop, Dark Phoenix. How can that outweigh hits like Avengers and also them launching Toy Story, Aladdin in the same quarter?
It's pretty shocking. I mean, Disney had $3 billion movies in the quarter, and so including the highest grossing ever with Avengers. The profits at the division were up. It's just that they admitted that the Fox acquisition is costing a little bit more than they anticipated, and that's going to continue for some time. They outlined even wider losses in the next quarter. Part of it has to do with the film library of Fox. I think probably there's a reason Rupert Murdoch sold. Bob Iger talked in terms of boosting the results for Fox's live action film business, and he said that could take a couple of years.
Wow. All right. Well, we'll see if this quarter with Lion King coming out gives them a boost. Bloomberg's Chris Palmieri, thanks so much. I'll let you get back to covering the Disney headlines as they cross. Coming up, taking down a hacker with a tip line, using the old school to fight the high tech. That is next. This is Bloomberg. I'm Emily Chang in San Francisco. When you hear the words tip line, you're probably used to thinking of calling a police hotline to report a crime or sending your local news station a lead on a story. But they're also used by companies to try to expose cyber vulnerabilities in their own software systems. According to a 2018 report by HackerOne, 93% of the world's largest public companies don't have policies to handle such outsider tips. Luckily for Capital One, they did. And it's what led to the arrest of the person who allegedly accessed sensitive data on more than 100 million people. To talk about this and a whole lot more in the world of cybersecurity, we've got Roy Carmel, the Chief Strategy and Product Officer at Cyber Reason, a Boston-based cybersecurity firm that just got a $200 million investment from SoftBank. He's with us from Las Vegas, where he's attending the Black Hat Information Security Conference, big in the world of cyber. And in New York, we've got our Jenny Serrain, who's been covering the Capital One hack. And Jenny, we're learning new details about just how Capital One responded to this tip over the hotline. Tell us what's the latest.
Yeah, well, so Capital One got this tip. It was actually just in early July that an anonymous tipster emailed in and said, "Hey, just so you know, it looks like some of your data is available out on the internet." And the company was able to respond pretty quickly. I mean, just 2 weeks later, they were able to actually disclose the breach and start kind of working towards remediation. And so that was kind of the unusual aspect of how this one came to light. Normally, you see these hackers kind of lying in wait for months and months, and it takes companies a really long time to respond, but this tip line really was kind of instrumental in Capital One being able to have a really quick response.
Now, Roy, this isn't typically the way that hacks are discovered. How impactful or helpful could white hackers be in the future?
Yeah, so Emily, I mean, when you look at Capital One, or for that matter, any other organizations, they're dealing with any kind of threat, going from the traditional type of viruses that were in the past to more creative type of attacks as the one we saw here. In this specific attack, some internal information was leaked, and that was leveraged and used in order to get access to this kind of information. And so what we're seeing is that more and more of the attacks are becoming driven by creative type of either hackers or malicious players, what we call advanced persistent threats. And the only way to find them is to have an intelligent way to look at the organization and actually understand the behavior and stop it. In this specific situation, the information was just posted on the internet, so it was visible. But when it's not, the way to look at this is to understand how the behavior of the organization changes and be able to stop it right there and then.
Jenny, what if some of these white hat hackers are supposedly good actors then come across sensitive information in the course of their work to try to stop the bad guys?
Yeah, it's a great question, and I think it's honestly a reason that you don't see a lot of banks adopting these policies and kind of inviting hackers to come in and try and find these vulnerabilities, because they are worried that if that information gets into the wrong hand, they could be facing a huge liability. But so there's certain, companies kind of deal with it in different ways. I think Goldman Sachs has a pretty explicit description of their vulnerability disclosure program on the internet, and basically they say if you come across that information, you need to stop and immediately let us know. But it is kind of like a trust game in terms of, assuming that these guys that are really coming in to try and help your company aren't going to turn around and then hurt it if they were given the opportunity.
Now, Roy, your company actually installs software that aims to stop threats before they start. Tell us what kind of hacks you've been able to discover with your approach.
Okay, so I mean, if you look at the type of technology that Cybereason built, we actually took the type of white hat approach for being an intelligent system that looks at what could be a vulnerability, and actually developed an AI capability, an artificial intelligence capability that gathers huge amounts of data and understands that data in real time, almost like 8 million white hats that are asking questions every second, and try to understand, is there anything weird that's happening that we need to stop that usually should not happen. And when you look back at about a month ago, we uncovered Operation Soft Cell, which was the biggest cyber espionage that was ever discovered by a nation state attacking a commercial telco organization across the globe in order to run an espionage campaign around specific individuals through this telco organization. So the type of attack they had was actually a very slow and quiet attack into the organization, and the only way to figure this out was to constantly collect this immense amount of information and understand that behavior is changing and stop it right there and then.
Now, Roy, you're at the Black Hat Cyber Conference right now. I've been there. I imagine there are so many different topics under discussion, especially as tensions ratchet up between the U.S. and China. You've just got this new stash of funding from SoftBank. How do you plan to deploy it, given the trends in cyberspace right now?
Yeah, so this is a pivotal moment for Cybereason. We're extremely excited for this $200 million investment, and we have 3 things that we're planned to do with the investment. The first one is to expand our existing go-to-market globally. We're already deployed on all 5 continents in multiple countries, and we want to strengthen our relationship with our partners and dramatically grow our go-to-market motions. From a portfolio perspective, we're doing 2 things. The first is we're strengthening our position within what's called the endpoint protection platform market and solidifying the portfolio that we already have there. And the second is we're building the next generation of autonomous security to allow artificial intelligence and machines to start protecting these organizations instead of throwing bodies at the problem.
All right, Roy Keimel of Cyber Reason. We'll let you get back to the conference, and Bloomberg's Jenny Serene continuing to cover Capital One for us. Thank you. Well, WeWork is close to naming J.P. Morgan the lead underwriter of its IPO next month, an offering expected to be the second largest this year. It's a relationship that's been many years in the making. J.P. Morgan bought a stake in WeWork 5 years ago and has since propelled the startup's growth, providing more financing than any other lender. Now, the bank will help the company line up its most ambitious fundraising yet, a $6 billion debt financing package that depends on the IPO's success. Joining us from New York to discuss, Bloomberg's Sonali Basak. So, Sonali, what's the latest that we know?
So JP Morgan's relationships with WeWork actually span much further than WeWork itself. Jamie Dimon and Adam Newman have a very strong relationship. When Adam Newman goes to the other banks, he actually pitches his own relationship with Jamie Dimon. And so the reason this matters, too, is JP Morgan actually has millions of dollars, $40 million out in mortgages for Adam Newman's own homes. They've provided the financing for the margin loan, or the money that he took out against his own private stake in WeWork. And so they have a very strong relationship. They're poised to lead the IPO. But let's be clear, the reason WeWork is such a prime client for these banks is not just this financing or the IPO ahead of us. It's the fact that they're so capital intensive. They're going to keep needing money, and that's going to keep driving a fee pool for a lot of these banks.
So what's next? Obviously, the clock is ticking here.
The clock is ticking. They said around September. It's any day now, really, when we can see the IPO. They had the analyst day, or at least the filings for it, rather. We had the analyst day last week, and so people got a glimpse of what they're trying to sell. Remember, the $47 billion in the last valuation, a lot of people are skeptical that they could hit that in the next one. And that means a lot for WeWork, obviously, but it also means a lot for all the banks that are really trying to place themselves well in the IPO race here. Is this kind of, if they don't keep on making these IPOs work well for them, then it bodes poorly for the next set of IPOs ahead.
How well does this set up J.P. Morgan specifically in Silicon Valley, given that Goldman Sachs and Morgan Stanley have typically been the leaders?
Very well, honestly. So Lyft, remember, didn't do too well earlier this year, but either did Uber, and Morgan Stanley was leading that one. And so it does help them get on more high-profile deals. The other thing that's interesting about WeWork in particular, remember, people debate about whether it's a real estate company or a technology company, and a lot of companies are in this situation now too. Are you an automobile company or a technology company? And so for JP Morgan to kind of show themselves as a broader firm, to help a different array of firms sell themselves as a technology firm, a high-growth firm, which the market has had a lot of demand for up until this point, that's going to help them get pretty far.
All right, Bloomberg's Sonali Basak covering WeWork for us. Thank you so much for stopping by. Coming up, Android everywhere, how Google's mobile OS beat out Microsoft and Apple to be the smartphone king, and making waves now. That is next. This is Bloomberg. Amazon defended its use of sales data from third-party sellers in response to questions from a House panel conducting a broad antitrust inquiry of the tech industry. In a letter addressed to the head of the House Judiciary's antitrust subcommittee, Amazon said that analyzing aggregate sales data to bolster its private label strategy is a common practice in the retail industry. David Zapolsky, Amazon's general counsel, writing to Representative David Cicilline, it's important to note that private label products are a common retail practice, and that's good for customers and competition. Alphabet's Google and Facebook have also responded with their own letters to Representative Cicilline addressing the congressman's antitrust concerns. Joining us now to discuss, Bloomberg Tech's Mark Bergen in Seattle, Bloomberg Opinion, Shira Ovide with me here in the studio. So you guys have had a chance to digest this response. Shira, what's their argument?
So the argument is a little bit different depending on the company, but I think what's true across all of the three, Google, Facebook, and Amazon, is basically the message that they're not that big. they're not that bad. They have lots of competitors. Did we mention China? Wave American flags, the end.
So what about Amazon's argument in particular?
So Amazon's argument, there's a couple different things. One is Amazon is trying to say that, you're looking at market share wrong, basically. That if you look only at how much people are spending on Amazon as a share of online shopping, that's too narrow. Because if somebody's buying a microwave, I think is the example they gave in their letter, if you're buying a microwave, you're probably not only shopping on Amazon or other online sites. You may also go and look at that microwave at Walmart and things like that. The other argument they make at Amazon is basically that sellers, the merchants that sell more than half the goods on Amazon, they have the same access to information that Amazon does, basically, and that Amazon is not using that data to determine when Amazon makes its own version of a desk chair or an office lamp.
Is that a fair argument?
Not really, to be honest. I mean, look, an individual seller does have information that Amazon provides them, but Amazon knows Amazon has visibility into everything that's happening on its site, and an individual seller only knows what's happening to his or her merchandise.
All right, so Mark, what about Google's argument? What are they saying?
Yeah, the questions were actually the question looked at Google's evolution from 10 blue links when they used to send out viewers and searchers to a bunch of different websites to a world in which a lot of the properties now land on Google's own sites. They have their knowledge box that basically you can get an answer right there. Their response was sort of twofold. It was, we do still send people out, we do still send clicks out to other websites. It's also that websites can actually pull themselves from that knowledge box. And so their answer was, that was kind of revealing. They're effectively saying, we're still driving a lot of traffic, but if people don't want to participate in our ecosystem, they have the choice to back out.
So speaking of Android, there's another story out today that Google is requiring its competitors to sign NDAs as part of an Android auction that will list alternative search engines as an alternative on Android. Can you tell us exactly what's happening here, because Google's competitors aren't happy about it?
Yeah, they're not happy about it for a couple of reasons. One, it seems like we had a great reporting out this morning that they're actually being forced to sign non-disclosure agreements, and that's suggesting that they can't even talk about sort of either to the EU, they're kind of concerned that they're hamstrung, and the idea is that this is set up like an auction, so they sort of effectively have to pay in order to get in front of consumers if you're opening up a Samsung phone, say. I think the bigger issue why they're frustrated here is that Google has had these years and years with Android cutting these special deals with the handset makers. So when you buy a phone out of the box, you're going to have this Google as a default search engine, Google Apps. It's clearly something where a lot of consumers, their default is to think about search, they think about maps, they think about browsers, they automatically think about Google.
Now, Shira, you've got a great piece out about sort of the history of Android, and you remind us that even, at the very moment that Android hit the market, Steve Jobs was pissed. Essentially, this quote from him, "I will spend my last dying breath if I need to, and I will spend every penny of Apple's $40 billion in the bank to right this wrong. I'm going to destroy Android because it's a stolen product. I'm willing to go thermonuclear war on this." Gosh, you forget how colorful he was.
Not subtle,
language.
yeah.
But how does the argument that Steve Jobs is making inform what's happening right now?
That's an interesting question. I think what the argument Jobs was making was twofold. One is that Android was a stolen product. That's how he felt, right? That it was an open ripoff of the iPhone. And Apple's strategy back then was to sue these kind of Android proxies like Samsung and try to stop them in the courtroom. But I think the other point that Jobs also made was that Android was kind of this horrible mess, and it was bad for consumers because it was insecure, because there was a zillion different versions, and so that often meant that people who were buying Android phones did not have the latest operating system with all the features and security. And I think those are similar arguments that are being made now about Android, and they're all true for what it's worth. I think those are arguments that Google has made to justify its making of its own Android hardware. But ultimately, all of this doesn't matter, and I think what the European European Union has done, it doesn't matter because Android won in smartphones, and now people are thinking about what's next, and I think the status quo is not going to change.
Meantime, Google taken another beating from the president today in a new series of tweets. It seems that President Trump was watching Fox News when an ex-Google engineer appeared, claiming that there was anti-conservative bias at Google, and that is why he was fired. We've got that series of tweets from the president, mentioning this engineer, specifically saying, at the very end, all very illegal. We are watching Google very closely. Mark, Google came out with a statement saying that their political leanings don't inform the product, and if in fact they did, that would make the product worse. But how much teeth do these threats from the president actually have, given the looming antitrust investigations and the continuing scrutiny from lawmakers in general?
Yeah, it didn't seem to affect their stock price today. I think it went up when the rest of the market was down. I do think that they're much more concerned about the direction of the inquiry from the Department of Justice and certainly from Congress than they are from the president at this moment. But politically, it seems that the president is using Google and in general Silicon Valley's sort of liberal leanings as an election issue. I think Google's probably, if they're smart, bracing for just continually being beat up on this. And it will be interesting to see if they come out ahead and try to respond to this more publicly.
All right. Bloomberg's Mark Bergen and Shira Ovide. We could continue this conversation for much longer, but we'll have to let you go. Thank you. Still ahead, could Israel be home to the next Silicon Valley? Why the nation is being dubbed Startup Nation next. This is Bloomberg. Silicon Valley is notorious for tech giants like Facebook, Google, and Apple. But with a population of just 8 million, Israel may not be too far behind. According to the 2018 Global Startup Ecosystem Report, Israel's Tel Aviv, known as Silicon Wadi, has the highest number of startups per capita in the world. And Israeli tech companies raised a record $6.5 billion in venture capital last year, up 17% from 2017. Joining us to discuss, Wix.com president and COO Nir Zohar. Wix is a cloud-based website development platform in Tel Aviv and a huge company. So, Nir, tell us about some of the tech trends in Israel that might surprise us.
Well, I think that the most interesting trend today, Israel has been dubbed a startup nation for a long time now. I think what's interesting today that you can see in Israel is actually the maturity of some of those companies. Some of those companies are moving beyond just being startups and being full-blown companies like Wix, like CyberArk, like Fiverr, and a whole bunch of others. And I think that generally you can also see that there's a new generation of entrepreneurs that are less prone to trying to exit early and sell their companies, and want to build something which is bigger, something that can last for many years. And as an Israeli, my hope that at some point we'll see one of the tech giants coming from Israel and having our own tech giant.
Meantime, there's a lot of talk about trade, a lot of things happening geopolitically. What is the impact of the U.S.-China trade tensions, for example, in Israel?
So I don't think we've seen any real impact directly on Israel. I think there's some impact around currency when Israel gets a stronger shekel. Then we have the issue in which we pay salaries in shekels and then make most of our income usually in US dollars, and that can have an impact and put some stress on the local economy and the local industry for the high tech. But so far, I think as much as we are feeling that, I don't think it's had a huge impact.
So, obviously there are cities and countries around the world trying to recreate Silicon Valley, even cities in the United States trying to recreate Silicon Valley. Do you believe that's possible in Israel to continue to build the tech hub there such that it could rival the United States or China?
Well, a rival, it's hard to say. As at the end of the day, there is the question of population. It's a much smaller population than either the United States and definitely China. But I do think that in terms of per capita, if you look at of our ability to innovate and generate tech companies, then absolutely yes. I think what we're still missing is what I mentioned before, that kind of the bigger companies coming out directly out of Israel. By the way, hopefully Wix will be the first one.
All right, Wix.com President and COO, thank you so much for
Thank you very much.
Well, a Swedish payments and banking firm backed by rapper Snoop Dogg is now the most valuable European fintech startup. Klarna is now valued at $5.5 billion. It is challenging companies like PayPal and Square. Speaking of the Silicon Valley beyond. And that does it for this edition of Bloomberg Technology. We're live streaming on Twitter. You can find us there at Technology. And be sure to follow our Global Breaking News Network TikTok on Twitter as well. This is Bloomberg.